Basically, everybody got this right. You're spot on. Moderna had the highest beta this year. Another thing about Moderna, so you might think, they're so volatile, they have such high risk. Moderna, I think, went up like 300% this year. They had a fantastic year to date, and that is contribute to many different things. But it just goes to show you might want to take on that risk, but you'll also take on that reward. I leave it to one of our analysts, Nathan.
Okay, so my name is Nathan, and I'm a analysis for RTA, and I'll be discussing how to open a brokerage account. So setting up an account today is as easy as just downloading an app on your phone. But prior with setting up an account and putting your private information, it's always best to do your research to find out what suits you the best. So the most common ones in Canada include Wealthsimple, Questrade, and as well as the big five banks, which includes RBC, CIBC, BMO, TD, and as well as Scotiabank. So now moving on, I'll be discussing about Wealthsimple, which is actually probably the most popular platform in Canada now. And it's usually because of its user friendliness and as well as $0 fees, which other platforms do not have. So it's commission-free stock trading, does attract new investors. As now today, people are investing as young as 18 years old. So Wealthsimple is always a good app for that. And also it does attract investors because of its portfolios that other brokerages don't really have, which is, having a halal portfolio and other portfolios that may suit you the best. And so with Wealthsimple Trade, with it being a Canadian platform, it does have US securities and US stocks, but there is a currency exchange fee, and they also do have a lack of smaller cap American companies. So that's really the only flaw with Wealthsimple Trade. But moving on to Questrade, it's another online brokerage that is extremely popular. And Questrade provides their customers with access to all US markets and also OTC stocks, which means over-the-counter stocks. Those stocks aren't really listed under the NASDAQ or the NYSE or the TSX, which does include more risk. And so although Questrade does include fees with buying and selling, their platform is well known to have active traders that use their numerous tools and resources. And this includes derivative features such as options. They also have mutual funds, and so they have a bunch of resources. So if you are more of an active trader that does like to trade option contracts and etc., Questrade is a great app for you. And now moving on to the big five banks, they are all pretty similar. Most of them do have buying and selling fees and the advanced tools and resources. And also they do have the financial guidance as they are linked to a bank. And so although it may seem overwhelming with trying to pick an account and setting up an investment account, some research is extremely important. And besides research, you should also look for its customer service. There are some platforms that reach back to you within a couple of days or a couple hours, which may be too late. Also, if they have any fees regarding ETFs, which is essentially a big basket of different individual stocks, and as well as their account security, making sure that your information stays private and your account is not easily can get hacked into. So besides that, also knowing about financial literacy and knowing your personal goals and also your investment strategies is a good thing to know about yourself while doing research with these apps. And now lastly, heading on to the poll. It's a true or false question. And the question is, there's no point of comparing brokerage accounts when investing or trading. We'll give you guys some time for that. Okay, so now topic 3.
All right, hello guys. So my name is Brooke. I'm also another analyst here at RTA. So I'll be going over topic 3, which is basic charting techniques. So what you see here on the left is a picture of a candlestick, and I'll just be going over what you guys need to know. Just so a brief disclaimer before we move on with this slide is that there's multiple ways of charting a stock, but the candlestick shown before you and what you'll see in the subsequent slides is one of the more common ways of charting stock. So as you can see here, candles are used to display the activity or movement of stock prices in a chart. If the candle is green, then for the selected time interval chart selected, the price closed higher than when it opened. So the price went up. For the red candles, the opposite is true, which means that the price of the selected stock closed lower than when it opened. Next slide. So I just grabbed a picture of the SPY ETF, which just tracks the whole US market, the S&P 500 index. And this is just pulled off of Yahoo Finance in case you guys want to know where I got the chart from. And the candles are set at 5-minute intervals, and the chart is for 5 days, which is a week. And this was pulled Friday night. So this is from last week's trading activity. So just some general observations that if you're trading or investing, you want to be able to make is what's the general move of the market. So from this chart that you can see, I'm just looking from last week's, you can see that the chart, or to a greater extent, the US market dropped last week, starting from Monday going all the way down to Friday. A note being that last Monday was Labor Day, so the markets are actually closed. Moving forward is just another thing when you're trading stocks or looking at charts is that you want to make sure that you are watching and looking at key levels of the prices. Prices like to stay, at least in the long term, prices are sticky is what you'll notice. But in the short term, they do move a lot. So I put some arrows to point at some key observations I noticed from last week's chart. And that the first thing is that the key levels of the week were as follows. The resistance level was around $452.30. So if you look at the chart and the numbers on the right, you can see the scale. So 452 is on the higher end. So the higher of the two black lines. And this is the price that the stock failed to hit and go past. So typically when stocks trade, they like to trade in something called the channel, which is just, it keeps going up and down, as you guys can see from the first couple of days of the trades, of the week. So from when, so from around the Wednesday area, as you can see, it's closer to the middle of your chart. It tested that level and then it started going down, right? So as you can see, it goes past this second black line. It's called the support. And what a support does actually is something that every trader just charts. But what it really does is it gives you a general level of where the stock is headed during the week. So typically, like I said, once you graph it out for yourself, the stock typically does not move in between these areas. And if it does, then typically it breaks out into random fashion. So as you can see here, it breaks from the chart and it falls all the way down to 445.50 as of Friday's close, which is the final arrow on the right. Next slide. The bottom wick on a red candle indicates the lowest trade price for the period. True or false? All right, so the results are in and most of you guys selected true. So moving forward to the next topic. Yeah, so true. So most of you guys got it right. Sorry. So topic 4, financial resources. So Dataroma. And what it does is enables you to see what equity professionals are adding to their portfolio. The site does this through filtering through the 13F of the SEC form, which all directors and high-level people in a company have to submit. Further, company insider information also shows up if top professionals of the company are buying or selling a stock. And commentaries and articles are also on the website along with an interactive market grid. Just a small saying on the street. You guys probably heard this, or you guys can search this up after. But what a lot of people do say is that insiders sell for a variety of reasons, but they only buy for one. They expect the price of a stock to go up. So just small words for you guys to keep in mind. Next slide. CNN Business. So CNN Business gives you the latest business news free of charge, along with a clean dashboard showing real-time data. Additionally, it also shows stock price forecasts, which are available from equity research analysts, allowing you to see the potential targets the market or the street sees for stocks in the future. Professional perspective is also shown on the website, which can help you create ideas. FinViz, sorry. This website is great for screening stocks and seeing potential signals that are about to occur. FinViz also displays top winners and losers along with an S&P 500 sector box diagram. You're also able to see insider information, and another important feature, it allows you to backtest potential trading strategies. Major news relating to equities is also displayed along with what happened to the stock after. Investopedia. Investopedia is an excellent site for educational purposes. It covers almost all key financial ideas at a high level. For example, if you had no idea what EBITDA is, you could search it up and it can give you a definition. Additionally, the website also displays relevant news and insights relating to the financial markets. Investopedia also has a stock market simulator where you can simulate having a portfolio with virtual money and see how your ideas and trading strategies are doing before you open up a real account. Bloomberg. The Bloomberg Terminal is a software which provides vendor data and helps professionals in the financial services sector. Users can monitor and analyze real-time market data, place trades, research, read news, and communicate to other professionals. The cost of Bloomberg Terminal is $24,000 yearly. However, students that are in the School of Accounting and Finance have access to the terminal in TRSM. Non-staff students can make a request for access. Just in regards to that, I myself am not a staff student. I requested it and I got approved. It's pretty easy. All you guys have to do is send an email. There's a certain dean, you could search it up, but you email the dean and they give you access if your reason is valid. Next slide. Capital IQ.
Hey, Baruch, what was your reason for Bloomberg?
So when I emailed the dean, sorry, I forget the name. My reason was I just wrote that I wanted better stock research in regards to my clubs, the different clubs I'm in.
Yeah, good answer. Good answer.
Next slide.
This is it.
Oh, sorry. Capital IQ is a software that provides detailed research and analysis of stock market to various stakeholders. Users can use Capital IQ to do equity research, screening, view real-time market data, backtest, and manage a portfolio and a financial model. This software gives you most of the utility of Bloomberg. Additionally, Cap IQ costs $13,000 per year. However, students can access it through the Ryerson library database. True or false? As a Ryerson student, S&P Capital IQ isn't a good resource since the information is typically out of date. All right, so you guys all got it right. All right, so now on to our question period.
Yeah, if you guys have any questions, we went through these pretty quick. Covered a lot of information. I know a lot of people here might be completely new to the stock market. They might not know anything at all. Where do I start? Where do I begin? What do you recommend in terms of brokerage accounts? Should I trade through my bank? Should I open up a Wealthsimple account? Should I open up a Questrade account? What are the advantages to them depending on what kind of trader I am? Feel free to ask us any questions. You can turn on your mic. You can ask it in the chat. Raise your hand.
Sorry, I just noticed that the chat is disabled for me.
My goodness. Please.
1 second, the chat will be enabled. Okay, you should be able to now.
Hi, I just wanted to thank you for the information today. I learned a lot. I had a question. I'm not sure if it's too complicated or something I should ask in like the intro session today. I've been trading for a couple months now, and I was just wondering, when do you think is the best time to exit a trade, if there is one? And do you think I should be reinvesting profits into different companies? Or when do you find is the best time to take your profit and use it for not other investments, but to keep it for yourself?
All right, fantastic question. In general, before I personally make a trade, and I recommend this for everyone, is you should make an investment thesis, which is I'm going to buy this stock because of X reason or X, Y, and Z, all these different reasons. Look at your stock price and say, has my thesis changed? Has the company changed that thesis is no longer valid? Maybe it has, maybe it hasn't. Maybe the beta on your stock is very high and they do have these swings and you're not comfortable with it. That could be a valid enough reason to sell. If your stock you're holding happens to do well and you're kind of scared, like, when do I want to take profits? I know someone, and it's a very good idea, I do it myself, it's called skimming the foam. As your stock's like climbing, it's up 20%, up another 30%, skim the foam off the top, take like 10% out of your portfolio, take another 10% if it goes up another 20%. In that case, if it does do that crash, if it does have that fall, you took profits all the way up to the top. Bulls get slaughtered, bears get slaughtered. That's not the saying. How's the saying go? Bulls have good days, bears have good days, but pigs in the stock market always get slaughtered. Don't be greedy. If you're making returns, take advantage.
Yeah, I would just like to add, if that's okay.
Please, no, please, Nathan.
Oh yeah, so I mean, I feel like at the end of the day, it depends on what your goal is and how you invest or trade. But some techniques that I use or other people also use is, I guess, setting stop losses. So where you could still become profitable, whether it's a regular stop loss or even a trailing stop loss, which is where your stop loss climbs up with the price. So you can have like a 20% trailing stop loss, and so you will still become profitable. So at the end of the day, it's, I guess, sticking to a plan and using your discipline and not becoming greedy. So that's a good technique that I use.
I have a question from the chat. Someone is asking, can you define a day trader?
What is a day trader? A lot of different definitions. I mean, I guess someone who trades on the daily. I personally don't trade every single day. Stocks I buy are not that volatile. But yeah, someone who trades very frequently. I would say on a weekly average, I would consider you a day trader. Throughout the week, you're making trades.
Can I also add to that? I want to say day traders as opposed to more long-term traders, also, they kind of rely less on the financials of how successful the company is, because that kind of stuff implicates, okay, are they going to be around, the next quarter? But for day traders, they look at more technical things like very short-term demand, so all the ups and downs. So their purchases can be, only 5 minute long. They can be even a couple of nanoseconds. They have servers in the they have servers that they make robotic trades that mean that they can do it with really fast speeds, faster than anybody like you and I could do, unless we have also their resources.
Algorithm trading. It's very quick. It's all robots. Someone asked, can you trade through Bloomberg? I assume you mean Bloomberg Terminal. No, you cannot trade through a Bloomberg Terminal, but they give you really good information. That's like the best thing. Information means everything. And if you have better information than other people, you'll make better decisions. I see Shelly. I'm not
Yeah, hi.
Question?
Yeah, thanks for the information session. I was wondering, is this like a club? Can you join? Oh, okay.
You can join. Yeah, everyone's welcome to join. It's called Ryerson Trading Association. Where do I even begin? We kind of just are all stock market enthusiasts, and we talk and educate people about the stock market.
Okay, cool. So where do you join? And like
on our website, ryersontrading.com. I'm gonna throw it into the chat.
Okay, and then you just share like tips and
yeah,
I don't know, you probably don't trade together, obviously, but
well, we actually have a trading competition that lasts for 6 weeks throughout the year.
okay.
It's like virtual, so it's not your real money, but we trade, give tips, and teach how to trade, and then we have this competition where everyone gets to kind of get their feet wet a bit and test the waters themselves in the stock market with virtual funds and see how they all perform. And there's a winner, and it's very exciting.
Okay, cool. Okay, so you basically just sign up.
Yeah.
Okay.
Do we have sessions for technical analysis in stock charts? Yes, we do. Most of our equity reports, which are also on our website, we give a fundamental analysis, a technical analysis, and we break down different components of why you should value a stock based on the charting reasons for it, based on the price. We have other events planned for this year. As this was our intro event, we really focused on beginner stock market fundamentals, but in future events like Workshop 201 and 301, we go diving deeper into like more sophisticated trading techniques. I won't get into it so much right now. And one of my favorite events at the end of the year, early December, it's going to be a meme stock event. If any of you are familiar with GameStop or AMC, these stocks that just became a joke on Reddit, and they jumped, 700%, some ridiculous things. Well, some people saw that coming, and you're able to see that coming. So that's an event I'm really passionate about. I'm, for example, holding AMC right now. I don't recommend it. It's extremely volatile, super risky, but very fun. Yes, we will be having more registrations. We'll open soon for trading 201 and 301. They're just closed right now, and we're going to open them up a few weeks before the event, and send out emails. If you're on our website and you sign up for our newsletter, you will get all of our updates for everything. Any other questions?
Sorry, I wanted to ask you a question.
Yeah.
As a person who doesn't have like too much prior knowledge of like exactly what stocks I should be paying attention to, but rather just like the techniques if I want to trade in a certain stock, what kind of resource would you recommend to pay attention to for me to get ideas for what stock to start looking at?
It's a good question. I read. I encourage everyone to read basic newsletters to just like keep things on your radar. And what I do is, if I say I read the Morning Brew, it's a newsletter, really great. And on the Morning Brew, they might talk about a stock, might come up in passing. I'll add it to my watch list on the stocks app. Or if you download Yahoo Finance, you can also have a watch list and just watch it. See where it's going. It might have like big moves here and there. In general, don't buy any company that you don't know what they do. Warren Buffett said it. Great. The companies that he owns are airlines and Coca-Cola and McDonald's, because he knows what Coca-Cola sells and he knows what McDonald's does. Other companies, I don't know what whatever pharmaceutical makes. They don't even know what they're making. It's some random pharmaceutical company. Maybe not the best idea, because if you don't know what they're doing, how can you be so sure with your investment?
Thank you. That makes a lot of sense.
Another great quote by Warren Buffett was, "I'd rather buy a good company at a bad price than a bad company at a good price." People think like the price determines everything. You're holding something for over a year, and if it's a good company, you're going to be in the green. And you might I've bought companies that were just garbage at a low, great price, and it went to more garbage. So it just goes to show you, like, buy what you know. If it's a recognized company worldwide, like, it's not going anywhere. Like Facebook's not going anywhere. Amazon, they're not going anywhere. Apple, like, they're there for the long haul. You can be very confident in those trades.
Can I just add something too?
Yes, please.
Yes. So another thing about that, where you're saying what stocks to look at, another easier way to analyze the market is if you pay attention to certain trends that you notice, consumer trends. Oh, what's this new store everyone's flocking to? Or industry trends. Where do you see the future? For example, electric cars. And then once you do that, you can try to find good companies within those industries. And especially if you're a beginner and you pick stable industries that you know will go up. For example, let's say, for example, banking is not going anywhere for at least the short term. Most of the time you will be successful, even if you don't pick the best stock at the best time, because there's always a saying that rising tides lift all ships, right? So even in 2020, the market had a crazy year. It would be almost impossible for you to lose money, right? Unless you pick some crazy penny stock. But if you pick solid companies, stable companies that are known through word of mouth, for example, let's say Amazon or TD, most of the time you'll fare well.
Someone asked a question, Noah, that I feel like so obliged to bring up. If you don't have a lot of money, should you buy many penny stocks rather than little amounts of actual big corporation stocks? No, terrible idea. Absolutely terrible idea. I've played with penny stocks myself. I have lost money and I've made money. It's not worth that risk when you know I could buy a large corporation, maybe one of their stocks or fractional stocks. For example, if you have an account with Wealthsimple, they allow you to buy fractional shares. So if Amazon looks like, oh, it's so expensive, $400 for one stock, well, you can buy a quarter of that for $100. And that's going to perform a lot better than penny stocks. It requires a lot of research and a lot of luck to do well with penny stocks. I don't advise it. Someone asked, have you read The Making of an American Capitalist? I have not. I don't know what that is. I feel like it's up my alley if they had a Canadian capitalist. Oh, it's about Warren Buffett. Yeah, I see that. Any other questions? I saw one we had earlier about cryptocurrencies, asking if we were going to have a session about that. We currently don't have one planned. We love to hear feedback from everyone. If you have feedback and comments, you can really just send us any email on our website. We read everything that you guys send us. There's nothing that we get that we look over. And if we have that demand for it, we'll make a cryptocurrency event and session. A lot of our analysts and our traders are really into cryptocurrencies, and they trade them. I have a lot of friends that trade NFTs, for example, and it's exciting stuff. I personally am not that involved with it, but if people are interested, we'll organize an event and teach people about it, teach them where to trade, how to do it, how to get involved, what's the platform you should use. What are good books to read for stock trading that I would recommend? The Intelligent Investor by Graham. I can't remember his first name. If someone remembers it.
Benjamin.
Thank you, Benjamin Graham. It's like the go-to starter book on investing. Everyone says it covers your basics. It teaches you what value investing is, what to look out for when you are buying a stock. You know, oftentimes, I think he coined the term, when everyone's greedy, that's when you should be fearful. And when everyone's fearful, that's when you should be greedy. When do I determine whether to take a loss?
I'll add on to that as well. Mastering the Market Cycle by Howard Marks is a very good book as well. It kind of talks about the cyclicality of the markets and how different currents in the markets can indicate when you should buy, when you should sell. You know, the different things that are being talked about from different talking heads and stuff like that, and different investors and their optimism and pessimism. So that's a good one. Also, The Most Important Thing, which is also by Howard Marks. And if you just want a somewhat light read, businessy book that, you know, kind of looks at an entrepreneur that's made it very successful in the market, I'd also recommend Principles by Ray Dalio. He runs kind of, it's somewhat quantitative. Quantitative hedge fund. There's some intuition to some of the stock picks, but it's mostly made by he makes a lot of his decisions through algorithms and stuff like that. So that's a fantastic book as well. There's also many more, and we'll eventually put up a comprehensive list of books that we will recommend on our website as well.
I just want to add one more. Also, One Up Wall Street by Peter Lynch, or any books by Peter Lynch. I think one of those books you should probably read first before, let's say, The Intelligent Investor, because he speaks in a lot more of like common English, doesn't use too many complicated words, and he tries to explain it in really simple terms for new people. So I recommend any books from Peter Lynch.
Yeah, The Intelligent Investor is like, it's just like fancy English, right off the bat. So someone asked, how do you determine whether or not to take a loss? That's a hard question. I have two stock stories that I hope to answer that question. I once, many years ago, I bought CrowdStrike. It's a cybersecurity firm, if any of you have heard of it. I bought it at 60. COVID hit, it dropped down to 30, freaked out. It was a big part of my portfolio. And then as it's climbing back up, it hit 60 again. And I say, you know what? I don't want to lose. I'm afraid. And I sold. CrowdStrike now, what's the current price of it? I think it's like 250 or something. And it was like the biggest stock in my portfolio. I've never put so much money into a stock before. So I was like, wow, I lost out huge. Terrible. Another time I was holding earlier this year, it was called TCAT. It was a company that tracked NFTs. I was getting onto NFT craze. Sometimes momentum trading and just following the momentum of traders is a good idea. Sometimes it's not. And it dropped. I was down 20%, 30%. I saw it and I'm like, I don't trust it anymore. I don't trust the investment thesis. I think NFTs are stupid. I think they are dumb. I thought I could make a quick, didn't. So I sold and it ended up dropping. Had I held, I think I would have lost like 80% of my money. So you got to analyze, you got to look at it at the right time and say, is this stock going to go worse? Has my investment thesis changed? And if they haven't, double down, buy back. If you think it's a good company and the stock's now on a discount, I do that pretty often when I think a stock is taking a beating and I don't think it deserves, I'll double down on it. I did that with Palantir, done that with other stock companies. Anyone else, feel free to also give in their 2 cents. I am absolutely not the end all and be all of knowledge. There are lots smarter people in this club.
For certain situations, I have kind of found out that it can be a good idea that if a stock goes down and you're holding it, that you try and cancel out your losses by buying more at that like big drop that you went through. But you need to also reanalyze the purchase when you're doing that, because it is a repurchase. It's not doubling down is a English term that we use to coin it, but it is a new purchase.
Mohammed Mirza, you asked, for those just getting started, are there any resources that take you through trading from A to Z, maybe a website or a YouTube playlist? Yeah, there are. There's a lot of different sites. Top of my head, if you look up Investopedia, gives you a ton of essentials, just like Noah pointed out. There is a YouTube page called tvtrader.live, I believe, or tradertv.live. And they do day trading literally every day. We had them as a speaker one time last year. And the CEO, he just on live TV, he'll open up and he'll show you all the trades he makes that morning until the market closes at 4 p.m. And he just shows like, I made this trade and I sold at this moment. I bought it, I held it for 20 minutes and I sold it for that long. And he's like, this is what I made at the end of the day. And he shows you, he's like, it's all public. You can see, he's like, you can copy every single thing I do or not, because, risk involved. And you really learn a lot. Just like he talks out why he's doing it, his thesis behind all of his trades. He does a lot of charting. If you want to learn charting, it's an incredible place. Are there any resources on the charting in just finance overall? Yeah, Fin 501.
Fin 65 and 75, those ones are new.
Yeah, those are 2 new stock trading courses. They're not made for finance students. I've spoken to the professor who made it, Alan Kaplan. He actually promoted it through this club a lot. He really wanted all the members to like check it out and apply. It was made for anyone in Ryerson who were interested in trading. In Fin 65, you manage a real portfolio. Like the Ryerson University put in, Baruch, maybe I think it's like $400,000.
500,000 Canadian.
$500,000. There's $500,000 that the school puts in the hands of us students, and they say, make this decision. Where should we invest this money? And they do it. And it's an incredible course. It goes for they have an abridged one in the summer, and then they have, I think it's a year-long course. Yeah. Can SAF students take it because I'm a finance major?
Yeah, SAF, there's actually more finance students. That's why they try to push it to other non-finance students to take it, but yeah.
Mostly SAF students try to get in. That's why they push for non-SAF, but it is mostly SAF students. Yeah, McGill Personal Finance teaches it really well. Take that course. You can take that course as any student. Ophir, I assume you're referring to Fin 65 and Fin 75.
Yeah, just as an example, over the summer, there was a journalism student that was in Fin 65, so anyone can do it.
Anne Van asked, what types of research on the stock do you find before purchasing it? Baruch, Noah, do you want to answer this first before I go?
Sorry, what was the question again?
Yeah, sure.
What kind of research?
He wanted to know the research that you do before you purchase a stock? I could just, like it really depends on multiple factors, like the main two types of analysis that people look for when they're looking at stocks, mainly is technical and fundamental analysis. Fundamental, you're looking at balance sheets, earnings, the overall health of the company itself, maybe looking at price to earnings as well. There's multiple figures that you can look at. Technicals, you're looking more at chart patterns and different RSI. There's so many different things that you can look at. But yeah, Baruch, if you want to build on that as well.
Yeah, no problem. I think when you're looking for stock research, like Noah said, it really depends on if you're a short-term trader or a long-term trader. But even, for example, there's some resources that apply to both. So for example, I've used Bloomberg a lot. Bloomberg offers a lot of resources for both short-term and long-term traders because it does offer real-time prices, but it also has a vast amount of articles written by people on the street, so people in Wall Street and Bay Street, and a lot of their analysis is, I don't know how to say it in any other words, but it's high level stuff. They really spend their time going through it, and sometimes just reading through the stuff, even if you don't invest in the company, it teaches you to look at what you want to look for in a company.
I really like to look at the 52-week range and look at where the stock was and where it is now. I really, in my preference, I try to see the background. Like, did they have a big climb? What was the reason for that climb? Why did they have that big hype? Was it just speculative? And now, if they took a big beating, and the past like 6 months, they're down a lot. It's not the safest thing. I get very incentivized by that, because sometimes if you are a short-term trader, that's when they make those big swings after that long-term drop. Peter, you had a question.
Yeah, thank you guys for taking the time to share those important information. My question is that how do I start trade? Like, what are the first steps that I should take to be a successful trader? Like, start right from the beginning. Like, I have a lot of resources. I have a lot of websites. I have friends who provided me like with some books, but it's always the beginning, like the first step, how to start right, how to use those resources efficiently and effectively, not just read and then forget everything afterwards. Thank you.
If you are unsure, I would always say the best thing to do, if you have like a lot of cash in your portfolio, it's just sitting there doing nothing, and you don't know what kind of trade to make, you can always rest assured and say, I can just put this into the S&P 500. I can put this into the NASDAQ. I can put this into the top biggest companies in the world. And you can know with certainty that in a year, that company will be in a better spot than where it is now. If you're hesitant, not like the first trade's always like the scariest one. So that's what I would say. Don't make it a scary one. Make it a safe trade. Also, always trade within your Tfsa. That's also a huge thing. All of us have a tax-free tax-free trading account, savings account, and all the capital gains we make in that account is tax-free. So if you have money and you want to trade, make sure it's in your Tfsa, because don't pay taxes.
I believe if you sell the security,
okay, it wasn't that bad. I just have to do a write-up for it, but it's okay.
Hello, you're not muted.
Okay. What I was trying to say is, I'm pretty sure in the Tfsa account, if you sell a stock after holding it for less than 1 year, you actually do get taxed capital gains, but you only get taxed 50% of your profits. So
I was doing the CSC, and actually, it's not about a single stock. It's about the volume. But in the tax-free saving account, there is not. There is no tax attached to it. It doesn't matter. Yeah, the time or the amount.
Shelly asked, but isn't it capped? Yes, you are right. It is capped. Every year you're given a certain amount more contribution room into your TFSA account. You can find out exactly what your contribution room is if you've never checked before. It's on your CRA account. If you've never been onto your CRA account, you have one. You can sign in through your bank. It's super easy. And
if you've done taxes before, that's the key.
If you filed taxes before, yes. Yeah. Or you can call a CRA and they can tell you. You just give them your social insurance number and they'll tell you what your cap is. You don't want to overdo your limit because I believe you're taxed at 1% per month on all of your over contribution. So say you put in $10,000 over your contribution room, at the end of 12 months, you'll pay $1,200 as a fine. So it totally offsets any gains you might make. And yes, if you're with Plus Trade, you can still find that out also.
Looking at the time, I think we might have time for maybe one more last question. So does anyone have like one last burning question that they need answered? Waiting for that, Aisha, you can go on the last slide that shows our contact details. So if you guys have any questions, comments, feedback, we'd love to hear from you. We love interacting with you. We want to connect with you. So those are the ways that you can connect with us.
This event was recorded. Oh, closed it. This event was recorded. So we'll put up the recording onto our YouTube, onto our website, and you can find it all on there. If you have any trading questions, you can also email us. We have a WhatsApp group chat. Many people are in it. Sometimes it's a bit more active on other days than not, but you're welcome to join. If you have any burning questions, we're always available. I love getting random questions from strangers about investing. It's such a better DM to get than anything else. So how do we access this WhatsApp? That's a great question. I can share it right now. One moment. And once again, keep up with our updates. If you signed up on our website, then you'll get all of our event updates and we'll keep you up to date on basically everything. Let's see, RTA. Here's the WhatsApp link. And follow our Instagram as well, RyersonTrading.com. We post a lot of small stuff throughout the week, trading tips, charting, Wizard Wednesdays, stocks that we have our eyes on. And we love to see everybody there. Thank you. Thank you everyone for coming.